Edition of the MPC Markets Morning Call, 15th of September 2025. Stocks drifted lower on Friday night. Investors await a plethora of central banks this week. The Nasdaq was up, however, but the rest of the markets, the rest of the indexes in the US were down for the night. As you can see here, the Dow down 0.6, the S&P slightly negative, Nasdaq up 0.42, but the Russell down nearly 1%. Some pretty mixed signals, really, in terms of the data on Friday night. So everyone's still really worried about inflation, but we did see weekly jobless claims climbing to their highest since 2021, reinforcing the weakness of the labour market. And obviously, we had some inflation numbers, probably a little bit hotter than the Fed would want overall, coming in last week. So that CPI number at 2.9, even though it was as expected, was certainly probably took 50 off the table in most people's minds. We've still got really strong technicals overall here, although we got a little bit of a sell into the close there, which turned the hourly around. We've got a neutral there in the S&P. And for the Aussie market, we've got a neutral on the daily as well. But everywhere else is still sort of sitting in that strong buy region. Asian markets have done pretty well in the last week overall. And we were flat essentially for the Aussie market, for the whole week. But having a look at the market map here, Oracle came off 5%, but look, I think we were up nearly 40% at one stage during the week. Larry Ellison actually overtook Elon Musk as the richest man in the world for a very brief period at one of the intraday highs. I don't think there's much to look into there or read into the fact that they were down on 5% on Friday. I think it was just giving back a little bit of those very, very significant gains. I mean, we're talking about an enormous company, and which many are describing the last earnings as just they've had their Nvidia moment. Apple had a bit of a rebound. I think they got reaffirmed by a couple of brokers in terms of being a hold, which helped them a little bit higher. Micron continued its magnificent run. It's a short-term or global alpha holding here at MPC at the moment. We've had to raise our price target on that. It's absolutely blistered through there, that 150 mark. And I think it's got earnings sometime within the next 10 days. So I don't think it's this week. I think it's early next week for Micron. But they're the memory chip provider essentially, and one of the one of the big beneficiaries of what this Oracle earnings announcements really doing for the broader sector overall and the data center sector. So Tesla was up 7%. I think just technical momentum there. It was really under the pump overall, more because of people hating on Elon Musk than anything else. And we've seen that stock rally from about 275 to back to nearly 400 now. I think it's possibly, with the robotics and things that are coming out in the next couple of years, the self-driving cars, robo-taxis, just the data from the self-driving cars alone, and everyone's going to end up having to use because they're just so unbelievably far ahead. Tesla, in my mind, has been extraordinarily cheap, whether you like Elon Musk or not. So overall, not very surprised there. Look, it was a bit of a, the week ended with a whimper rather than a bang, I suppose, for the US market and those dual concerns there around inflation and the labour market. Consumer sentiment did drop to 55.4 from 58.2, falling short of expectations as well. So we had treasuries move about 6 basis points higher, which a lot of the news pundits and Newswires, etc., have quoted over for their evening reports or morning reports on Friday. Probably more lack of anything else to talk about, to be honest. There was a Trump threat about tariffs if the Ukraine war doesn't finish, but I think Trump is comfortably in the white noise category now. The market is just generally categorically ignoring him, and rightfully so. So we're just going to give a bit of a look at the significance for the Oracle outlook last week. So this is just graphically, look, 10 billion ending May. They reckon it'll be 18 billion at the end of May 2026. But look at this chart. I mean, they're forecasting this thing to be, nearly 10 times higher over the course of the next, 4 or 5 years. And their multi-cloud database revenue grew 1,500%. 34 multi-cloud data centers now live, and they expect to deliver another 37 for a total of 71. And just to bring this back to the Aussie market a little bit, I just went and had a little bit of a dive into, NextDC and Goodman, or Goodman's our preferred here at MPC. What relationships NextDC and Goodman have with Oracle, and which one had the stronger relationship. So NextDC does have a relationship. They will facilitate Oracle Cloud through Axon platform, sorry. And it's just a cost per basis, really. Whereas Goodman's has a strategic partnership for Oracle's long-term infrastructure and data center global expansion. So they're actually strategic partners to build out some of Oracle's, data centers. So at the moment, there's been a lot of buzz around NextDC, and I get it. There's a lot of buzz around the thematic overall. It's not our favorite. I'm just, I think Goodman's is a very smart way to play it because they've got a few other bits and pieces in their REITs portfolio. They're not necessarily considered a pure play, but I quite like that about it, because if the data center thematic, and thematics do go through very hot periods and then they'll cool. I think Goodman's has that backup, and there's a very clever stat from that Citigroup watches, which is Goodman's global hiring, and when they're advertising for jobs, and when it's high, they generally have, or nearly always have, a very good 6 to 12 month period straight after, and that is tracking at the moment at very high levels. So I think Goodman will be a beneficiary. NextDC has already been a beneficiary, but just to go into the nuts and bolts of it, it's not going to have as big a direct impact from Oracle essentially pushing it through, but they do facilitate it, so they are going to have some knock-on effect overall. This week, central bank bonanza. We got industrial production today in China. Look, that could be pretty significant. We'll have to see. It's around about midday today. We've got an RBA governor, assistant governor speaking tomorrow. Retail sales probably won't do anything just because of where it's placed in the calendar, because we've got on that Wednesday night, Bank of England Bank of England meetings the following day, but CPI, they are worried about inflation over there. And whilst that's not necessarily a live meeting for the Bank of England, that CPI number may change things a little bit, particularly if it comes in lower. Bank of Canada, they're expecting 25 basis point cut, and FOMC meeting at 25 with about a 10% chance of a 50. I can't see retail sales, unless it craters, but making any difference to the FOMC meeting. I think the political pressure that Trump's putting on, Fed members and voting members particularly, with the firing of Lisa Cook's a shot over the bow, and the fact that he's very clearly been looking into, Fed members' personal finances, etc., and that huge revision in the jobs numbers for the annual number, inflation numbers could probably give them an excuse. However, PPI was down. They don't tend to follow CPI and PPI because they are more volatile. PCEs, they're more followed number. I think there's a higher chance of that 50 basis point cut, just on the basis that they're likely, I mean, the whole market agrees that they're likely going to do 75 to potentially 100 by the end of the year. And with the amount of pressure that's being put on them, really, what difference does 1 month make if they're going to go 25, 25? I mean, they can always then wait. They can always then wait afterwards, and and pace it out. But it just might get Trump off their back. And one thing markets has taught me, human self-interest is usually a pretty motivating factor. And as much as the central bankers might be, saying they're independent, I know what I'd be feeling like if I was being investigated. It's almost like an audit. So look, we had, gold and silver continued their rally. Silver to a fresh 14 or 15-year high, depending on whether you're watching spot or futures. Getting very close to that. That 15-year high now. It's only, well, when I say very close, it's about 17 or 18% away. But commodities can go on runs, and it could be a lot closer than we think. Copper dipped a little bit. Interestingly, though, the COPEX or wire, which is basically holds units in COPEX, ETFs for the copper miners hit 52-week or record highs. So despite the fact that the copper price is not really rallying, there is a fair bit of interest in the copper miners. And I would say overall that, I think the copper price might start to play a little bit of catch up. It's rare that the miners would lead the commodity, although maybe there is some apprehension given Trump just flippantly throwing out tariffs here and there to take large positions in copper. But overall, I think that Oracle data center expansion thematic as well really does play into demand for the likes of aluminium, copper, and water, which you can't really play on the Aussie market, but you can play via PHO ETF in the States if you've got US access. Ecolabs is one we like as well. So and uranium's still doing fairly well for the week, and I dare say that's part of that same thematic overall. So one thing I forgot, I'm just looking at lithium here at the moment. One reason that we may have seen that push up in Tesla over the course of the week as well is he has announced that he's doing shipping container size batteries for data centers with their own transformer, and essentially we'll get that could be a big thing for, instead of having to have diesel generators. So obviously, Tesla increasingly becoming very much not a passenger car business. It's more of a robotics, self-driving cars and battery business overall. And vehicle sales numbers are not necessarily the top priority for Tesla. So I'm just going to have a quick look at silver here, just to give you a bit of a look, and more so this rally here. And that was, that was coming out of the GFC. Don't get me wrong, but silver is not, it's like it can rally very steeply, as you can see here. This thing went from about $18 to make that record high at $50 in one, in a very short period of time. We're talking probably 6 to 12 months there. Did come back down, but as steep as this rally looks, it can get steep very quickly. I mean, that 18% there, as I said, doesn't seem that far away to me, because look at that when it started to go, and look at the start of this. I mean, we're basically sitting at $30 there, and that is well under 6 months for it to get to $50. So 18% is not a lot. It is on a bit of a tear. There is potential liquidity issues on delivery at both, at both London Metal Exchange and COMEX at the moment as well. They won't have enough to deliver if people want to be delivered upon. So that is always a leading indicator as well. So 18% to the all-time high. Just to return to the 50-year average of the gold-silver ratio, which is 60 to 1, is $60. with gold at current prices, which is 43% away. Not saying it's necessarily going to get there anytime soon, but I'm just trying to give you some historical context of, of when silver runs, how hard it can run and how quickly it can run. So, just as I say, bit of historical context there. You can play it via ETP, MAG, which is an ETF just with physical silver. A lot of the silver miners in Australia are very junior, and they've already run. So we've got Polymetals, POL. It's New South Wales based in production. Pretty simple. Will benefit from silver prices going higher. So, but outside of that, there's not too many we're mad fans of, but we've got a lot of silver via structured products, via ETP, MAG, and we've got some of that Polymetals for the global, the ASX Alpha. So, but really, I think we'll be in a bit of a holding pattern for most of the start of the week here. There might be a bit of buoyancy in the materials sector potentially, but the SPI was down 0.6, 0.7 on Friday night, and more so taking a lead from that broader market rather than the Nasdaq, obviously. And I think the only thing that could probably save it today is probably going to be that China industrial production number at around about midday. Any green shoots of an economic recovery there could very much help the materials sector, but apart from that, I'd probably just be staying out of its way in the morning here, and sticking to your your high conviction thematics. But hope everyone has a great start to the week, and we will speak again tomorrow.